But we're going to start with stocks rallying for a fourth straight day on the hopes of a rate cut next month. And while investors are focusing on the Fed as the next major market catalyst, my next guest says there is another one out there, and it should not be overlooked. The One Big Beautiful Bill Act kicking into gear early next year. Join me now with his thesis is Bill Stone, the Chief Investment Officer over at the Glenview Trust Company. Bill, you're talking about taxes and regulations being that big macro driver. Why is it going to be as big as you think it's going to be?
Well, I think, certainly the economy at the moment seems to be in a, we don't have all the data yet, but seems to be in a bit of a soft patch. But we're going to see quite a bit of stimulus coming in through a number of tax cuts, both on the consumer and the business side. That should give us a shot in the arm. So as long as we can kind of hold it together until then, economically speaking, at least I think that gives us an even better chance to get it kind of restarted and get going again, particularly if the Fed does follow through and cut rates as we expect here in December.
Where will we see the biggest impact, Bill, of the regulatory easing that is anticipated with regard to the tax rates that could be cut that will be beneficial to certain parts of the market over others? What exactly is going to be the outperformer when it comes to the market, given that One Big Beautiful Bill Act catalyst?
I mean, I think you could see the consumer, again, have more money in their pockets, which should help drive spending. And we all know a big part of it is obviously the U.S. economy is driven by consumer spending. And so, it's a win-win on that side. So we may see certainly an Amazon and some others benefit from that. And maybe, hopefully, we hope the housing market as well.
Now, it's also the regulatory side of things is one big view here, but it's also about whether or not we see the economy doing better because of it. You mentioned consumers getting maybe some relief, corporate entities maybe getting a little bit of relief on their tax bills as well. How exactly does that play out in your mind for the macro economy in the first half of next year? What kind of growth expectations are you maybe factoring into your models at this point?
Well, I mean, I think it's more for us is thinking about whether we can avoid recession, because stocks are currently pricing in, since the sell-off in late October, or, I'll call it a pullback. It's not much of a sell-off, which is a good thing. But, they're still not pricing in much of a chance of recession. So I think that is part of what would support stocks if you continue to kind of move away from the chances of recession. If you continue to have to price in more chance of recession, then, it gets a little harder in terms of how things work out next year.
What's the market view then for next year? What are your expectations for the S&P 500, for that big AI tech trade, given that backdrop you've laid out?
Yeah, I mean, I guess I'm hoping we see a little more broadness in the market. We really, at the end of October in particular, got extremely narrow to just some of those big tech names. You talked about it just moments ago, the small caps starting to pick up. I'm kind of hopeful that they'll finally show up because I think a lot of what is laid over the top of them has been worries about the economy at times. Also, frankly, the growth has all been, in terms of earnings growth, has all been in those tech names. If we see some sort of spreading out in terms of growth rates, maybe you finally get a little life out of those.